An impending property debt disaster. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. Grab your stein of coffee, let's look at this article written by Nassim Karem on ABC News. Fears of a debt disaster as the property market runs hot and changes to safe lending laws loom. Well, we'll have to see. I wonder if this changes to these laws are going to make that much difference. I mean, businesses or banks are simply risk management businesses. That's what they are. That's their whole game. I think if anything, it's going to, well, it's going to screw it up for the brokers. It's going to screw it up for the brokers, make it more onerous for them, and drive more people into the banks. You know, maybe that's the plan all along. I need to get my tinfoil hat on, or my aluminium foil hat on. So, Jacobs had big dreams before the GFC. He wanted to develop his then property in the Tweed Valley into a tourist lodge. That sounds nice. I mean, the Tweeds, it's lovely down there, everyone. By November 2009, he had a serious accident on the farm tractor and could not work. He asked his lender at the time, who he had taken a high-risk, low-doc loan from, to let him defer mortgage repayments until he could resume work. But the lender would not give him leeway and started charging higher interest and default fees. All this said is, when are you going to pay? He told the ABC News. He was forced to put the property up for sale in 2010, but because of the GFC, potential buyers were also in strife. He couldn't sell in time to keep the bank at bay, and eventually they repossessed the property. This is the thing, guys. We haven't seen any of this yet. We're in a completely artificial market. The CBI has promised to not start repossessing properties until September. We've had mortgage holidays. We've had JobKeeper propping up how many zombie businesses. We've looked at it before. The number of insolvencies or personal insolvencies and external administrations are at half of where they should be. And that's in a good time. That's not with a recession. What's going to happen when some of these businesses aren't getting paid? So, we've lost all the hard work of 12 years, doing up the property into a real magic place. That's what we lost, he said. And we ended up in a caravan. I mean, there you go. I mean, it's beautiful. Beautiful. So a debt disaster looms. Jacob's story is one that consumer advocates fear could repeat itself. The federal government is looking to wind back safe lending laws, saying there are other adequate protections for consumers. Well, here's the thing. Do we put the responsibility on the banks, or do we put it on the individuals? Maybe if we're winding back these safe lending laws, there needs to be at least a minimum level of financial literacy in the citizens of our nation. When the media doesn't even talk about having emergency funds set aside for these type of circumstances, when everyone just instantly expects welfare to take care of you guys. It's not. It's not there to take care of you. It's there to keep you from being destitute. It's just a crime mitigation strategy. It's not there. The government isn't your friend. Okay, when are people going to learn this? Reserve Bank Governor Philip Lowe this week said the central bank would be keeping an eye on lending practices by the banks. But Catherine Temple from the Consumer Action Law Center is part of a coalition of consumer groups that have written to financial regulators, including the Reserve Bank, detailing their strong opposition to the proposed law. Ms. Temple said axing safe lending laws during a pandemic was risky and would fuel an already overheated housing market. Well, the Reserve Bank doesn't care about housing. We've seen that already. They've said that. And the government, they want to juice it up, guys. It's economic activity. It's going nuts. You know, we've got to keep... What do you think wins more votes? Property prices increasing or property prices falling? Let me know on that one. I'll have a shot of coffee. You know what we should measure? Not GDP, not all these other factors. We should measure the quality of life. Like the IPA report. Australians' quality of life is getting worse. Our GDP growth per capita is going down. Just being able to keep a wife at home and have her raise the kids while one person works, that's a luxury. Everyone. That's not normal anymore. Not because we're all progressive and woke. No, I'm sure that a lot of people would love to do that. But it's because we can't afford to. She said more than 33,000 Australians and 125 community groups have signed the open letter against the National Credit Consumer Credit Protection Amendment, Supporting Economic Recovery Bill 2020. I mean, here's the thing. Fundamentally, the government is just doing the same stuff. There's nothing innovative, nothing exciting, nothing new coming out of it. They're just playing with the edges, and I guess that's all you really can do in our current political system. I mean, would they be brave enough? Okay, everyone, we've got this special economic region here that's been declared. Minimum wage has been removed from this area. Taxes for anyone paid below this level have now been removed. So, we're very concerned that we're destined to repeat the mistakes that we made in the lead up to the GFC if these changes go ahead. We can see a debt disaster on the horizon for many people who could take out unaffordable loans as a result of these changes. Okay, well, here's the thing. Whose responsibility is it? It's all safety theater. There's always going to be people bitching and moaning that other people didn't take care of them. Fundamentally, that's what it is going to be. You've got to realize, okay, here's the thing. If you're looking at getting a house, you need to look at, do the sums of what happens if interest rates go up even higher and higher and higher. What if it goes to 7%? What if it goes to 8%? Can you afford it? What would you have to cut out of your life to make those repayments? Because that may happen. Okay? It may happen. And if you're thinking, no, it'll never happen. You know, it's impossible. Come on, guys. Look at what's happened this last year. You need a plan for it. Maybe you don't get the flash super big house. Maybe you just get a cheaper block of land and you build something bloody small. And then you extend on it as you need it. Maybe you find the dump that you're embarrassed to show people. Or you move to a suburb that isn't Burleigh Heads with a $50,000 deposit. Okay? In the end, it comes down to you. The government ain't your friends. They're not going to help us, guys. We saw in a previous video about a woman who's getting screwed over because the Queensland government won't even fight to maintain the laws that they've put in place. And she trusted them. Maybe I'm just getting... Am I getting too cynical? I'm getting too old. I'm going to be 40 in a couple of days. That's what it has to be. The bill has been scheduled for a parliamentary debate on Monday after a government-led Senate inquiry report on Friday recommended that the changes to the law be passed. However, the bill could still be rejected by the Senate crossbench, with both Labor and Green senators that took part in the inquiry expressing their opposition. Labor senators said in the report they were concerned that the passage of this bill will seek to transfer risk from lenders to consumers and give a significant financial benefit to the banking sector. Well, you know what? Let's remove the requirement for mortgage insurance then too. You know? Why not? The banks should pay that themselves. The Greens said the bill was designed to let the banks get on with writing loans as big as they possibly could, which is not good for people. Which it's good for people or not. Whether it's good for people or not. Well, I mean, do the lefties just think people don't have agency? Is that the fundamental problem here? You've got people who think that the dumb plebs are too stupid to actually even bother educating in financial literacy and planning, that will just implement these rules in place. What about if we had IQ tests? If your IQ was, 100 or above, then you didn't need to jump through these stupid rules. Anyone below that level who was, doesn't have average intelligence or maybe is retarded gets these protections. And then there's an extra cost for it, or we subsidize it. So we don't, rather than having these burdens placed on everyone else. Or is that politically incorrect? In a country that already has one of the highest levels of consumer debt per capita in the world, this bill will give the banks a license to entice people into even more debt, the Green Senator Nick McKim said. Well, you know what is putting up the housing is a lot of the policies that have been that have become mainstream because of the Greens. Look at all these environmental interventions into property. It all adds cost. These worthless reports that don't really add any value can cost thousands of dollars, adding to the cost of a house. Treasurer says other protections still apply. Federal Treasurer Josh Frydenberg has previously argued that responsible lending obligations would still apply to small amount credit contracts below $2,000 and consumer leases. He also noted the government had introduced several reforms that had strengthened consumer protection. These, he said, included handling more power to corporate watchdog, the Australian Securities and Investment Commission. A best interest duty for mortgage brokers. See, this is the thing. The mortgage brokers are getting screwed. Increased finance. The mortgage brokers have got all these requirements put on them, and the employees of the banks don't. So, I suspect in one regards it's a targeted attack at that industry for the banks. Anyway, increased financial sector civil and criminal penalties, enhanced protection for credit card customers, and establishing the Australian Financial Complaints Authority. Despite that, Ms. Temple said that under the government's plan, banks and other lenders would not need to do the same degree of verification and checks to make sure that loans are affordable and suitable for people. We're hopeful that the crossbench will vote against this legislation because of the immense risk that it poses not only to individual borrowers and their families, but to the community and the economy more broadly, Ms. Temple said. But here's the thing. If you want a housing market correction, you want this to happen. You want all the stupid people who leverage too much, can't handle it, fall over, are forced to sell. You want that. You want the market to correct and people to learn these lessons the hard way. Is that too harsh now? Are we not allowed to think about that? Are people not allowed to actually encounter any adversity? If you're borrowing to the hilt, you're taking that risk. You may reap the rewards of it. You'll get the benefits of it. You know? That, with risk comes potential reward, but also comes a huge potential loss. Is that not taught anymore? Are we so sheltered from that? Is that why we're getting a society that's so sheltered and protected and afraid of any adversity? We know that 2 in 5 Australians are already struggling to pay their bills during the crisis. We don't want to see easy credit tide people over in a way that's just going to lead them further and further into financial hardship. Yes, that's going to happen. That's going to happen regardless of this. It's, people already now are going to payday lenders not making ends meet. People are wasting money on things that they think are a luxury that are not. People are going into debt because they've got absolutely no financial literacy. Not once in any of these articles. That'd be a good thing if Nassim would do an article about just preparing for tough times. The snowball method for paying off debt. The building an emergency fund, how to do it. I saw on news.com there was another piece where a mother, Brisbane, I think an Instagrammer, was sharing how she just paid off debt with $5 at a time using those small amounts. That's what needs to be highlighted. That's what needs to get out of there. Because this bullshit isn't going to make a difference to anyone who's already stuck in these problems, who's borrowed too much, or the person who's about to sign on the piece of paper. It won't make any difference. We know that. It's all theatre. The people need to get control of their own lives. Interventionists and people who want to protect others need to realize what's more important, rather than implementing these rules to kind of buffer it, which everyone will go around anyway, is to teach and educate people so they will realize that they have agency and they can take charge. Everyone has. At least that's my opinion. I believe everyone has a degree of agency. Some people tend to think that it doesn't exist. Maybe that's just an ideological difference. My immigrant upbringing is coming through here. So, this bill will take consumer protections backwards a decade, let the banks off the hook again, and expose ordinary Australians to their own stupidity. Sorry, she said crippling debt. I said stupidity. So is the housing market overvalued? Or is our fiat currency getting less value? The laws are being wound back at a time when Australia's housing market is running hot. Property analyst CoreLogic says the market is in one of its strongest growth phases on record. Capital city house prices rose 2% in February. This is funny. We're reading about another article where the IMF is warning about NZ. I don't know if I'll release it before or after this video, where property prices are going up over 22% in February. 2%. Psh, Australians, come on. The Kiwis are beating us at this. They're kicking our ass at rugby, and now they're kicking our ass at property price gains. Come on, boys. We're doing it wrong. We can't let the bloody Kiwis beat us. Buy more. Since October last year, Sydney home values have risen 5.7% to reach new record prices, surpassing their previous peak of 2017. The recovery trends in Sydney following a 15.3% decline from July 2017 to May 2019 were interrupted by the pandemic, with house price values falling by 3% through the worst of the pandemic. According to CoreLogic's daily hedonic home value index, Melbourne dwelling values remain 1.3% below their pre-COVID highs. Perth values are still 16.9% lower than their peak in 2014. So people want to borrow more. For mortgage brokers, that has meant a boom in business. General inquiry in the last 6 months has been busier than I've had in the past 16 years of being a mortgage broker, Sydney-based broker Terry Unwin said. She said low rates allowed people to borrow big, but banks were still verifying people can afford to repay. The banks have reduced what they were assessing loans at. In 2018, it was closer to 8%. Now it's closer to 5%, Ms. Unwin said. Borrowers say the maximum amount people can borrow has increased due to the lower interest rates used to assess loans and a take-home income boost from recent tax cuts. But the increase has been limited by a rise in living expenses benchmarks most banks use to assess loan applications. Overall borrowing capacity has remained pretty level because of the increases in living expenses and the banks that the banks are benchmarking, Ms. Unwin said. Other records within the broking sector report that borrowing capacity increased by around 7.5% since July 2019 for a typical family on a $150,000 household income with 2 kids. The amount people can borrow has increased even more than that since the peak of lending restrictions and the bank regulated 7% interest rate floor on testing customers' ability to service loans was placed during 2018. Ms. Unwin said so far access to funding has not been made easier, but there was less paperwork being required when banks sign up customers. Some lenders are making it easier in terms of paperwork required for a new loan application, she said. Previously, we would have to provide 3 months bank statements, 3 months credit card statements, and details of liabilities. Perth-based mortgage broker Hila Singh said her customers were trying to push her to get bigger loans from the banks so they can afford more expensive housing. In Sydney, such as Sydney and Melbourne, the prices have gone up so much, she said. There are people who are saying, I can afford it, I know I can do it, so how am I going to get my hands on more money? Well, if they can, if they're willing to take the risk, what's wrong with that? Really. People want to do it, let them do it. If people are going to fall over, let them fall over. If people have to learn the hard way, shake off the dust, step up, and keep getting forward, that's life. Or isn't that what life is meant to be? Am I out of date, guys? Okay? It's brought up in the 80s. You know, immigrant parents who migrated from Germany over here. Okay? Is that just not how we have it now? Is it all meant to be, you know, a woolly cotton, you know, government needs to take care of you. They'll provide for you. You know, the banks are your friends. They trust you. Believe the advertisements. Can tell I'm getting old. So, she said lending criteria did not change much, but warns her customers not to get in over their heads, especially now that responsible lending is ending. People need to be aware of responsible borrowing. If the banks are going to give them money because their borrowing capacity, that doesn't mean they should go ahead and get that much. Well, yeah, we were offered that. We just thought it was stupid. The risks of higher rates. AMP Capital chief economist Shane Oliver worries that at some point down the track, interest rates will rise and people will be unable to pay their mortgages. With the removal of responsible lending obligations and the property boom underway, the risk is that those lending standards will be eased and people who maybe shouldn't have gotten a loan will end up getting one. Dr. Oliver says, well, then the market will correct. It happened in the US. Is that not a bad thing? Do you not want the market to correct? People have... Maybe I'm just out of date, guys. It's such an old concept thinking people have agency. But he said higher rates would not be in the cards for another few years. I mean, that's the thing. People are... what's going to happen is people will take these loans, they'll go right to the edge, they'll push themselves right to the limit, they'll bubble up the market. And then in 5 years' time, when rates start creeping up, they're not going to be able to handle it. And then they'll have to either downsize, they'll have to get a better job, they'll have to do something. That's the risk. The greater likelihood is the Reserve Bank, with other bank regulators, particularly APRA, will put pressure on the banks to slow down the pace of lending, tighten up their lending standards, Dr. Oliver said. Property data analyst Martin North from DFA said if the federal government changes are passed that suggested it would place more obligations on borrowers. It tilts the playing field in favour of the banks, especially now, with the prospect of rate rises and higher unemployment ahead, Mr. North said. Then we need to empower people to understand their financial decisions. That's the takeaway from all of this. Because we're all screwed one way or another, guys. Come on, let's be serious. The decks are always stacked against you. The government's going to intervene in the market. They're going to do what they want. The RBA is going to do what they want. The banks have the ears of the politicians. And don't think there's that much difference depending on who you vote for. So you got to take charge of your own life. You know, borrow as much as you can service. Or, well, borrow as much as you can service without being under stress. Plan if your repayments, what would happen if your repayments would double? What would happen? Let us know in the comments. Would you be okay? If your repayments were to double tomorrow, would you be okay? So, borrowers can say whatever they like about their finances. The banks do not have to validate it. But it also means banks can then sue borrowers if later it transpires the information was not correct. I always thought that was the case. The federal government argues that the winding back is to ensure easy credit supply, but Mr. North said this is not an issue in Australia. Indeed, recent RBA data reveals strong lending for housing, even now with the current responsible lending mechanisms in place. I don't think it'll make that much difference, honestly. Housing credit is rising at an annualized rate of 3.54%, with owner-occupier loans at 5.88% and rising. Mr. North said too much of the Australian economy was leveraged to housing. Yes, I agree 100% there, which has led to home prices rising to unacceptably high levels. I would say too much of the productive capacity of our economy is now being funneled into housing. The lack of consumer protection, which will result from the removal of responsible lending, is likely to lead to larger loans, quicker loans, and consequently more households getting into financial difficulty, he said. It will simply create yet more systematic structural risk. So there we have it, everyone. What do you think? Are you worried about the removal of this legislation or these responsible lending laws? I think it's a bit of safety theater, to be honest. I don't know if it's going to make that much impact as everyone here is advocating for. I think we need to realize that people need to be educated themselves and to not trust the banks. Okay? Seriously. What would happen? Yeah, just do that sum. What would happen if your mortgage repayments doubled? If they doubled overnight. So next month you get a call from the bank going, we consider you a high risk. We're either going to force you to move somewhere else to another loan, or your repayments doubled. Could you handle it? Anyway, guys, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy merch from Heiser Says, use Gold Pass from the Perth Mint, or support us by PayPal. Take care, and I'll see you next time. Bye for now.